Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm joined with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. Hi Manu, how are you this week?
Hey Paul, how are you doing?
I'm doing great. What's going on in the world of crypto?
Okay, so interesting things happened as I'm sure most of you are probably familiar with. We saw Jerome Powell reappointed as the chairman of the Federal Reserve last week by Joe Biden, which is good. It's not Elizabeth Warren, which is a relief. So I think it's moderately positive. I think as much as you can be with certain central bankers in office, but he does love the money printer. So I think this is probably very good for Q1. On the not so positive news, essentially eToro delisted or are going to delist Cardano as of the 26th of December for US residents, and they're going to delist it for all residents of any country in the world in Q1 of next year.
Right, so now that explains the price action. So the bad news is coming out. Maybe it can start to rally. But why are they doing that?
So they were very vague. They essentially cited, and the fact that they're doing this for US residents first suggests it's obviously one of the 500 regulators they have in the States. I don't know why they just don't have one like other countries, but I don't know who it is. But yes, so they cited regulatory concerns about Cardano, which is really confusing because I don't think I've ever had, I don't remember any occasion when Cardano was being pursued by any regulator anywhere. So they have been the exact opposite, the likes of Ripple. And yeah, so I'm very confused by why they've done this. I can only imagine that maybe someone somewhere has decided to take aim at Cardano at the SEC, but entirely how or why they're doing this now, I don't really know. But to be honest, look, I'm not a huge fan of eToro at the best of times. It's a platform used by a lot of people that are brand new to the world of crypto. Essentially, when you trade on eToro, you are not actually buying or selling the token. You're basically taking a derivative position. So a leverage position on an already volatile asset class. Is that the first thing you should be doing as you dip your toe into the world of trading crypto? No, definitely not. So, okay, they're delisting them. It's not the end of the world. I don't think this is really that big a deal. It's just very bizarre timing. It's certainly not ideal, and it hasn't really helped. Although to be fair, they've had a bit of a rally yesterday in Cardano, but yeah, it hasn't really helped the price. You're right. It's been very flat over the last couple of weeks.
The prices looked like there was something going on, and now we know. So obviously behind the scenes there's been some form of investigation. Clearly we're not going to be party to all the information unless they decide to tell us what it is. So it's very difficult to make a decision as to whether it's a good or bad one unless we know why they're doing it. But it's not the end of the world.
Look, I don't know. I don't think so, not at all. I think this is just another bump in the road. I think, and I think this is not really that big a deal. It's just slightly frustrating that Cardano has been targeted like this. I don't really understand what the logic is. I mean, look, I'm sure time will tell, and we'll have more evidence come out at some point as to what the logic was behind this. But could it be fundamentally just a bad corporate decision? Yeah, maybe. Who knows? But speaking about bad decisions, my favorite person, Gary Gensler, who I haven't mentioned for weeks.
Oh yeah, of course, yeah.
I know. It's I've been busy with the fan club and the website, and getting T-shirts printed. So, but anyway, now I found a moment of time. Yes, unfortunately, so Wisdom Tree, who are basically they're probably my favorite fund managers when it comes to physical ETFs, because they're one of the very few, if perhaps the only, actual creators of ETFs in assets such as gold and silver that actually hold physical and not just paper, which I think is quite, I mean, not for instance, if you're going to have a BlackRock ETF, is BlackRock, the largest fund manager in the world, going to default and go bust tomorrow? Yeah, obviously it's not. But nonetheless, I'm kind of cautious when it comes to these kind of things, which is why I use Wisdom Tree. Now, they applied to the SEC to essentially launch a spot Bitcoin ETF. And the SEC deferred and deferred and deferred. And then, unfortunately, about 2 days ago, they came back and they rejected the application for Wisdom Tree. And I'm absolutely amazed that this has been rejected. Wisdom Tree have got pedigree and caliber in running ETFs and scaling ETFs for as long as I can remember. So the logic that was cited, or the criteria that was cited, basically was obviously, being the SEC was obviously about protecting investor protection. Was the main thing cited, and they criticized CBOE. So CBOE, which is a huge derivatives exchange, we're going to list this ETF, and they criticized the methodology that's being used to list it, which is insane. I mean, I appreciate they're a derivative exchange principally, but nonetheless, they've been dealing with regulators and listing ETFs for decades. So again, very, very odd. I think maybe this makes a bit more sense if you go back to the conversation we had probably 3 weeks ago, which was, what is the real purpose behind the approval of the futures ETF and not the spot? And my guess, and it is nothing more than a guess, was that I believe that what's going to happen is that at some point, maybe not this month or next month or even the month after, but at some point in Q1, we're going to see some regulatory changes that mean that only banks can custody digital assets. And if that's the case, that's going to be the prerequisite of launching this spot ETF.
And how would you position yourself? Would that be a broadly positive outlook for crypto, or do you think that we'll see a pullback as people assimilate that information?
So look, I love fintechs, right? I love fintechs. I love startups because I work in one, right? So I'm somewhat biased, but so look, my view is I think the real innovation comes from these small disruptive businesses.
Definitely.
But I'm also acutely aware. So, for instance, and it pains me to say this because I was a big fan of Fireblocks, the digital asset custodian that accidentally deleted the private keys of one of their account holders and is now being sued for $74 million, which is the amount they lost to Bitcoin. So that's not cool, and I'm not overly enamored with this. So, will these mistakes happen or not happen when the likes of some of the large banks get involved? Well, yeah, potentially. Maybe they will, maybe they won't. But I guess the difference is that typically they're much better capitalized and more able to weather these storms as and when they happen. So, look, I think it's net positive. I think it will probably be negative for driving innovation, but I think what it will probably do is by having the banks as the custodians of the digital assets, it will speed up adoption. Because again, if I'm a buy-side fund, a traditional fund manager, and I want to basically get into digital assets, am I going to deal with a bunch of businesses I've never heard of before, or am I going to go to, I don't know, Bank in New York or State Street for my custody services? I'm probably going to choose Bank in New York and State Street because I've used them for decades. So I think it will be initially slightly negative, and I think we probably will see a negative market reaction. But I think medium long term, I think it is actually positive. I think it really helps to get the institutions involved in digital assets, and it will get us up from where we are today, which is what's the market cap, $3 trillion to probably 10 or 15 or 20 trillion very quickly.
Yeah, ultimately it's an endorsement if we think of it that way. Like some people think that crypto is going to go away and it's just a fad, but if they're going to be doing that, then it's a long-term investment stroke endorsement in the sector.
Look, I think there's a couple of motivations behind this that are not necessarily transparent on the surface. But look, I think irrespective of some of these other motives, the net rationale I think makes sense, and I think you're right. This is long term, very, very bullish for the sector, and it means that essentially we're getting to a point where people are recognizing this is an asset. This is an asset class that's here to stay, and this is an asset class that is going to be integral to people's portfolios.
Absolutely. So, was there any other news that we need to go to, or should we have a look at the market?
There was one funny thing I read this morning. So so basically now academics have got into crypto, and there was a paper. I forget which university. It was an Aussie university. I forget which one. Maybe because I don't know any Aussie universities. I don't know. But they did a bit of research and said, oh, Ethereum is a much better store of value than Bitcoin.
Oh, here we go.
And they I was like, okay, brilliant. And they've done a whole paper on it. I have to be honest, I read the abstract. It's a very long paper. But I was like, I kind of came to this conclusion a couple of years ago. It probably is a better store of value. But here's the thing. I don't know whether you know this, but academic research is always correct. And every university professor is a millionaire.
Right.
That's correct. Yeah. Oh wait, no, hang on. That's not true. So I don't know. It was an interesting piece of research. And again, look, I think it's good because it kind of puts this out into the ether to get on people's radar. So I think it's net good. But, I use it absolutely. But I think it's a little laughable. And look, here's the funny thing, right? So if you think about science, you think about physics, you think about chemistry, actual proper sciences, you have essentially a laboratory where you can do experiments, right? If you look at economics or econometric research, what's your laboratory? You don't have a laboratory. So we have this phrase called ecological validity. And what that means is basically the real world application of a concept or idea or a framework. And most economic theory has zero ecological validity. It doesn't work in the real world. It just works in their laboratory. So I always take it with a bit of a pinch of salt.
Yeah, definitely. I feel exactly the same way. It's really interesting how economists create economic models of the market, when in fact, in reality, you should just be looking at the market, because creating a model of the market will always be inferior, and there will always be something the market does differently. And economic forecasting is a case in point in how big crises, for example, are never seen because the models don't have the correct parameters. And I'm not saying that it's always wrong and all economists are wrong, because that's clearly not true, and there's some great ones out there doing some brilliant work, but most of the time that starting premise is incorrect, or at best it's dangerous, because you're making assumptions, and that's the last thing you ever do about the markets. So was there anything else that you wanted to discuss this week?
No, that was it really.
Okay, fantastic. Well, we'll go across and have a look at the markets. We're going to kick off with the S&P 500, and the reason we're going to be doing that is because it's been a bit quiet recently in terms of we haven't really talked about it, and I haven't put it in the weekly for a few weeks, mainly because there were so many other interesting things going on, and it was just trading into a new high. But I want to show you this because there's a few things going on. Now, you shouldn't really look for a reversal pattern before it completes, but I like this support line here. This is the original reversal pattern that we were looking at in the S&P 500, which didn't break down. So it started to, it was all coming into focus, and it was all looking like this was going to be a big breakdown. And of course, markets being what they are, it didn't happen. So the probability was like 80-20 downside, but 20% went to the upside. So market trades into a new high, which is always a buy signal. It's now traded back through that previous support. Now, this could be looking like a big head and shoulders pattern. And I know it's very early, but I'm interested in whether this is going to be a bigger development, because sometimes when a topping pattern like this fails, especially with the trend rate failing, it goes into a major reversal. So that's in my back pocket. I'm going to keep an eye on that for now. So we'll be watching and tracking that week to week to see whether the evidence favors a big reversal or whether it means the market's going to negate it and go straight up. But what's working in its favor for a reversal is the VIX. Now, again, we haven't shown that for a little while, but look at this 28.79 level that I've been watching pretty much since the first research document. These lows are higher, and the VIX is constantly elevated. So it makes me wonder why people are constantly buying protection. Are they waiting for a shoe to drop of some kind? Will there be a bigger correction? This is a long-term thing, so it's not just something that's happened over the Omicron variant or anything like that. This has been going on for a while. So be aware that we could be looking at some form of larger correction, even if the broader trend eventually moves to the upside. Now, the Asian markets, as we've been focusing on, have been extremely bearish. This is the Hang Seng. It's broken its 2021 low, and it had a big lurch downwards and a rebound, because it's getting very close to massive support here down at September 2020. So it's getting close to very, very close to really important support from a year ago. But look at how that's trading compared to the rest of the markets. It's so weak. There's so negative. And it's what is the reason for this? It seems very strange that this is moving downwards when everything else is moving, or has been moving, sideways to upwards. And if we look at the Chinese stock market again, it's still languishing in the lows. I mean, to be fair, it's been in a range since July, so it's sideways trading. But when everything else has been trading up in the West and in Europe, it does stick out as being an anomaly of some kind. So
Do you know that? Do you know that tells that chart looks like it is preparing for an invasion of Taiwan? Is what it tells me.
Well, I did wonder about that. So I've been looking at the Taiwanese stock market, which has been trading off this massive resistance here at 712. So if it breaks that, which I think it will, because if you look at all these lows, they're rising, then this could really break out to the upside, and that links to the chip shortages and well, this basic chart looks bullish. So I'm trying to square that circle at the moment. It seems a bit odd that this would go up if they were invaded, but there's something not right going on in Asia, that's for sure. I don't quite know what it is, and people will be speculating in the way that you just have, Manu, and I think you're right to, because we need to find out quite what's going on. I think if there's going to be some form of international event, you'll see gold move higher. Gold hasn't quite done that yet. It's still in this range. So I'm watching that for, the fear index, as it were. But the S&P is starting to react to something. So we shall see. So moving over to the yield market, this is the 10-year yield, which has been trading and ping-ponging in a range, waiting to break out over this 170, which was key resistance, to get to this 177 resistance, which is massive. And if it can take that out, we're going to see a big surge in yields. So it's been trading in a range, going sideways. It's broken a trend line, which is the first sign of weakness, and it's hanging around this major support. So this 1.378 level is extremely important. I don't want to see that level broken if yields are to go up. And I don't think it will. I think it will just hold around here and then move higher, but we shall see. Now, a slight balance on that is that the equivalent in the 30-year, the equivalent support has been or is being tested as we speak. So the 30-year is looking a bit weaker than the 10-year, and this may be leading the way down. So we've got to keep an eye on that. But for the moment, I think that the trend in yields is basically to the upside. There is a pickup in the Baltic Dry Index and some commodities, so there is some evidence of inflation coming back in again in some of these metals, base metals, and some inflationary pressures. I know crude oil and natural gas have gone down, which is what we expected, but they look like interim corrections before the market goes back up again. So that will be an interesting broader signal, and we'll obviously keep an eye on that as well. So moving over to the crypto markets, if we start off with the spread, which is the spread between, here we go, it's the spread between Ethereum and Bitcoin. I want to start with this because we've been tracking this for a while, and once again, expecting a breakout of this high to see a surge in dominance of Ethereum over Bitcoin. Now, at this point here, it was getting near the high, so we expected a breakout there because it was so close to it. And this is how I like to anticipate the markets. I wait for it to get close to a really important level. And then if I was trading it, I would personally be buying it there. But if it doesn't work, then that's fine, because when these things move, they move very quickly. So we're now back at that level again. So why would it do that if it didn't want to extend much further? So we've maintained a broadly positive view of this spread, which means that Ethereum should outperform. Now, could that mean that Ethereum and Bitcoin could go down and yet Ethereum outperform? Yes, of course, that's absolutely possible. So what does the chart look like? Well, if we look at Ether, last week we were sitting on a support level, and what we looked for in the weekly was, as the market broke down, we were saying, well, if it breaks back above this resistance here, we would go long because it would be heading back towards the high. Now, it did that, and then it traded back down, broke key support, which is this level here at 40.30, which was the previous high. So it's put a negative trigger, and then it turned around and went back up again. So now it's breaking resistance and support levels, which means we've just got to stand to one side and really, just be a bit more cautious about what's going on here. Now, whilst it's above this 44.60 level, this yellow buy trigger, I think it's we should maintain a cautiously optimistic view. Now, of course, it does need to break this high. If you're going to be really cautious, then you'd wait for that high to break to confirm the trend, and then I think you should get at least 500 to 1,000 points of clear space on the upside. But it's been so volatile, it's very difficult to predict. But this definitely technically looks much more positive than the Bitcoin chart. So if we look at Bitcoin, the strategy here was to look for a retracement into this 53,500 to 54,000 level, which it kind of did perfectly. And I must admit, I was a bit worried that that level would break because of all the pressure that was going on right at that time. But it managed to hold, and that's all you can ask of it. Now, it's still stuck in this range. This yellow line is the buy trigger point. So if it can close above that, then I think it would look much more bullish. But it's still very tentative because this bounce has been a little bit more subdued. So we're kind of caught in a neutral area very short term, just waiting to see how this market trades. Now, if Ethereum breaks into a new high, it would be very unusual for Bitcoin not to at least try and follow suit. So I think Ethereum will be the one to watch to see whether Bitcoin is going to suddenly snap back up, or if Ethereum comes back down, then the risk will be that this support level will break. Longer term, I don't think that changes big picture tactics or strategy in terms of being bullish. I just think we'll get an opportunity to buy at cheaper levels. So the overall bullish strategy remains. It's just that, are we going to see a bit of a correction? Is the chance of a Santa rally increasing? Well, it certainly has since last week, which is a good sign. But I think we need to see at least one more week of consolidation above these important levels before we can get too excited. So we're being a little bit cautious here. There is good reason for that. Some of the risk off markets are indicating a correction. Yields have come down a bit. So in terms of a competition to the crypto space, that has eased a little bit. But the dollar index is still looking very strong. So it has come a bit lower, which is what we would expect. This trend rate was far too fast. It couldn't maintain that unless we were seeing something very special. So we've broken that trend line, but we have the next trend line waiting to pick up any support. So as the market comes down to that, I think the dollar will be bought and we'll see another upward phase. Now, whether that impacts the crypto space remains to be seen, because there seems to be a kind of general relationship. Sometimes it works, sometimes it doesn't. So it's a bit intermittent, not really sure whether it will affect it or not. So we shall see. But I don't see it as a broadly positive signal if the dollar's going up. It can only be either neutral or negative. But we will see how that trades. And the broader picture for the dollar hasn't actually changed. It's still broadly positive for this year. And I think next year things will flip and we'll see a big move in the dollar to the downside, which will be a time when I'd be much more comfortable in predicting a massive bull move in all the commodities, especially gold and silver, but also the crypto space will be running very hot. Just one final market that I wanted to draw your attention to. Well, actually, let's look at Cardano, just seeing as we've talked about it. So this is what we were saying last week. And in the weekly, there has been a noted underperformance by this compared to everything else. And now we've got the reasons. I think that makes it even more interesting. But given that the news is out, this has already hit a low and it's starting to move up. So isn't that interesting that the bad news is out and this is rallying? Now, we've got the long-term 200-day moving average that has been very good support in the past. If we actually go back, it acted as support all the way down here perfectly. And we tried to buy it against it, but it didn't quite hold for long enough. It went through it, but now it's acting as a bit of resistance. So if I zoom into the chart, you can see how it's traded. So it's trying to get back over the 200-day moving average. But this bar here is what we call a spike. So it's traded all the way down. People have gone short, bailed out. I reckon if I had to guess when that news that you were mentioning, Manu, came out, possibly was on the 28th of November, because that means that looks like people sold and then it rejected it. So there was somebody waiting to buy it. So that's a really good short-term sign, but we do need to get over this 200-day moving average for the market to get more positive. And ultimately, this resistance line here, which is going to come down in time and price to just over 2, once it's done that, I think it would have put all the bearishness behind and we can start talking about a move over 3 and beyond. So perhaps we've seen the worst. Now, MATIC, or Polygon, as it's now called, this has been quietly sitting in a triangle, and I really like these triangular constrictions because the breakouts are usually quite aggressive. So it's breaking the top part of that range, and it's traded right up to it and now through it. So from a daily and a weekly perspective, this could be a very interesting chart. So it should start trending in a similar way to the way it did here, to the upside. So that means it should, at the very least, and of course, the market can fail, so there's no guarantees, and this is just a probability. It should at least trade to the recent high and through it, and I'd be surprised if it didn't get to at least 3.5, given the power of the previous trend. Now, that doesn't mean it can't go beyond, and that doesn't mean it can't fail right here and collapse all the way back down, because in the markets, anything can happen. We're just looking at probability. But this is a very nice technical pattern, and it's starting to move now. So it's very much worth watching as we go into next week. But interestingly, the majors look a little less clear. So I think we've got to accept the markets for what they are at the moment. They're looking a bit more neutral. But if Ethereum, which is very close in an actual price action to its previous high, if it can just nudge up a little more, it will look so much better, so much clearer. But I'm just going to be a little bit more cautious until we see that, just because of the recent volatility. I don't like it when markets swing around and take out important levels like that. For me, it makes me a bit more cautious about what's going on. So that's it for this week. Manu, any final thoughts from you? What do you think of the broader picture?
Yeah, look, I think the broader picture is quite interesting. I think again, just I mean, I was only half joking about Taiwan, but who the hell knows? I think we're in a position or a period of time where we are seeing some very unusual and odd things. So I read something the other day about the Green Party in Germany that want to switch off all of their nuclear power stations.
Okay.
And interesting timing. You want to do this in December? Okay. Well, let me put my strategic hat on. If I was Vladimir Putin and I had control of your only other real source of energy, and I was like, I'm a bit bored of these sanctions. I really wish they'd go away. Hey, I know, maybe I'll turn your gas off. You look at this and think, I really hope this is just someone in the Green Party who's maybe had one too much peach schnapps or something. I don't know what the hell they're thinking, saying this. It's insane. But look, I think there's really a lot of things that could happen in the next couple of weeks, and I think, look, I'm on the same page. I think I'm hoping we'll see a rally into the end of the year. But if I'm being honest, I think realistically, I think Q1 is the actual time when we'll see this real rally, because there's so many geopolitical issues flying around right now that I'm not convinced, particularly in light of the fact that we're seeing some pretty interesting patterns in the equity markets. Is crypto going to outperform? Yeah, maybe, but realistically, I think it probably will be Q1.
Yeah, and you make a good point about nuclear power plants. For anyone who knows anything about them, just turning them off is not an option. I mean, once they're built and operational, the most sensible thing to do is to keep them open and operational and running, because it is very hard to decommission them, very expensive, and you may as well work them to the end of their lives. So, but Manu, that's really interesting. Thank you so much for your thoughts. And thank you so much for watching. If you have any thoughts about where crypto is going to go or what markets you'd like to see on the show, then just drop a line in the comments and we'll look at them next week. But we do try to cover pretty much everything. But if there's something that we've missed out that you'd particularly like to see, please drop it in the comments. Thank you so much for watching, and we'll catch you next time.